Well, the United States has just lost another ally to China, and this time it's one of the most powerful nations in the Western Hemisphere. In just a few short years, Brazil has gone from being one of America's closest partners to becoming China's #1 supplier of food, raw materials, and the #1 destination for Chinese energy investment. China now buys 70% of Brazil's soybeans, is financing new mega projects across the country, and is even helping Brazil issue debt in Chinese yuan instead of US dollars. You see, at the center of this shift are Donald Trump's tariffs, policies that were supposed to make America stronger, but instead have pushed Brazil straight into Beijing's arms. Trump has slapped the country with some of the highest tariffs in the world, leaving the Brazilian government little choice but to lean on the BRICS alliance. We've already seen Trump destroy America's relationship with India earlier this year, and now he's repeating the exact same mistake with Brazil. But this time, the fallout could be even bigger. Because what's happening in Brazil isn't just about soybeans or coffee. It's about which country will become the dominant power in South America for the foreseeable future. So in today's video, we're going to break down everything you need to know about China and Brazil's new partnership and how Beijing will shape the future of Latin America and the global South. Let's jump into it. Now, to understand how big Brazil's shift away from the US is, we need to remember that Brazil has historically been one of Washington's most important partners in the Western Hemisphere. During the Cold War, Brazil was seen as a counterweight to several leftist governments throughout Latin America. For decades, Brazil and the US cooperated in trade, security, and diplomacy. The US is Brazil's second largest export market after China, buying everything from beef to orange juice to coffee. American companies invested heavily in Brazil's industries, from car factories in Sao Paulo to tech services in Rio de Janeiro. Brazil was also a regular partner in G20 summits, working closely with Washington on global finance. But in recent years, the US-Brazil relationship has been deteriorating, and Donald Trump has poured gasoline on the fire. His new round of tariffs hit almost every major Brazilian export, most notably coffee, beef, and orange juice. But he didn't stop there. Trump even extended tariffs to both steel and aluminum. Now, Trump wants you to believe that these tariffs are about reducing a trade deficit, but many analysts see something else at play: politics. You see, Brazil's former president, Jair Bolsonaro, was one of Trump's closest allies, but today he's on trial for plotting a government coup in 2022. Trump has publicly declared the case a witch hunt and pressured Brazil's courts to back off, and when they refused, Trump retaliated with additional tariffs, a direct interference in the internal affairs of a sovereign nation. This kind of behavior from a US president is outrageous. It sends a clear message to Brazil: the United States is no longer a reliable trading partner. And right as Washington slams the door shut, Beijing is standing there, holding it wide open. Let's start with soybeans, Brazil's most important export. For years, American farmers dominated soybean sales to China. But in 2018, when Trump launched his first trade war, Beijing decided it no longer wanted to buy US soybeans, and instead pivoted directly to Brazil instead. The result was US soybean exports to China were crushed, declining more than $9.1 billion, or 75% year on year, from rising trade tensions. Fast forward to today, and Brazil now supplies 70% of all soybeans to China, worth over $50 billion a year. This is proof of how Trump's tariffs are backfiring, hitting American farmers, the very backbone of society, the hardest. Now, to lock in this relationship, Chinese agriculture giant COFCO has invested $285 million to build its largest export terminal outside of China, right in the port of Santos, Latin America's busiest harbor. This new facility will triple capacity from 4.5 million tons to 14 million tons a year. More than 180 million tons of cargo moved through the port last year, and according to the Rio Times, China already controls a quarter of all trade at Santos, Latin America's busiest port. Every ton of soybeans that leaves Santos for China is a ton that no longer comes from American farmers. Trump's first trade war already cost US farmers $27 billion in lost exports. Now, under his second term, the bleeding continues. And it's not just soybeans. When Trump slapped 50% tariffs on Brazilian coffee earlier this year, a $4.4 billion market, China moved quickly to take advantage, with Beijing approving 183 Brazilian coffee exporters to sell directly into its market. And the timing couldn't be better for Brazil. China is now the fastest growing coffee market in the world, with Shanghai alone boasting more coffee shops than both New York and London combined. You'd think Trump would have learned his lesson after gutting America's soybean industry. But once again, while Washington punishes, Beijing rewards, and Brazil is following the money. But honestly, agriculture is just the beginning. China has far bigger ambitions in South America. Chinese companies are now laying hundreds of miles of new railroads across Brazil's agricultural heartland, connecting soybean and corn farmers directly to the coast. Brazil and China have now confirmed plans for a nearly 3,000-mile transcontinental railway, linking Brazil's farmlands to a massive $3.5 billion deep-water port in Peru. And of course, it's no coincidence that China also built that port in Peru. Once complete, this new railway will slash shipping times to Asia by up to 10 days, a total game changer for global agriculture. In short, China isn't just buying Brazil's crops, it's literally building the infrastructure to move them. For Beijing, it's the perfect strategy. Secure the food, build the transport, and lock Brazil into its supply chain for decades to come. And this is the real story. It goes beyond short-term trade wars. This is about influence, control, and who will dominate South America for the foreseeable future. But China isn't stopping with food and ports. It's embedding itself deep into Brazil's energy and technology sectors as well. China is already the global leader in renewable energy, and its companies have built massive wind farms across northeast Brazil. The numbers here are astonishing, and you'll never hear this kind of detail from Western media. The Chinese-built Gamalares wind farm alone generates 360 million kilowatt-hours annually, reduces CO2 emissions by 358,000 tons, and has created more than 2,000 local jobs. And that's just one example. Another Chinese project in Bahia State produces enough electricity to power 430,000 households every year, while cutting carbon emissions by 650,000 tons. These aren't abstract promises. They're real projects delivering real benefits for Brazilian communities, and it doesn't stop at energy. For over 30 years, Brazil and China have partnered in space through the China-Brazil Earth Resources Satellite Program. These satellites track deforestation in the Amazon, provide critical data for urban planning, and even helped authorities assess the damage during this year's deadly floods in southern Brazil. When you add it all up, jobs, clean energy, cutting emissions, monitoring the Amazon, disaster relief, the tangible benefits China is delivering to Brazil are undeniable. Is it really any surprise that Brazil is shifting away from the US and leaning on China to build its future? China is fully integrating into Brazil's economy, but something even bigger is happening in finance as Brazil is shifting away from the US dollar and moving closer to China's currency as the renminbi continues its international expansion. I'm going to share with you the exact details of what's happening here, but first I want to switch to the investing portion of today's video and show you exactly how geopolitics is playing into the financial markets and highlight a unique investment opportunity that you can take advantage of as a result. You see, the United States has a major supply crisis on its hands. Right now, America produces zero antimony, a critical defense metal needed from everything from bullets to circuit boards to flame retardants. China, Russia, and Tajikistan control 90% of the world's supply, and in late 2024, China completely banned antimony exports to the US. President Trump knows this is a national security risk, and in March 2025, he declared critical minerals a national emergency, activated the Defense Production Act, and ordered agencies to fund new domestic mining projects. And that's where today's video sponsor, Resolution Minerals, trading under the symbol RLMLF, comes in. Their flagship Horse Heaven project in Idaho sits right next to Perpetua Resources' multi-billion-dollar Stibnite mine, the largest antimony project in North America. Mining is just like real estate. The most important thing is location, and given its proximity to this other billion-dollar mine, there's a high chance that Horse Heaven will also become extremely successful in producing antimony. The project already has a U.S. Forest Service approved plan of operations, and before a single drill hole has gone down, Resolution has already received a $225 million unsolicited buyout offer. That's more than 3 times today's entire market cap of just $70 million. In addition, the sampling of this site has been outstanding, 19.15% antimony, up to 19 times richer than typical deposits, 5.9 grams per ton of gold, top-tier grade right at the surface, 230 grams per ton of tungsten, essential for aerospace and artillery, and 367 grams per ton of silver, more than double what's considered high grade. This is the same ground that produced strategic metals during World War I, World War II, and the Korean War, and history suggests that the US can count on it again. But here's where things get even more exciting. Resolution has just appointed Roth Capital Partners to lead their NASDAQ listing. Roth is one of America's top boutique investment banks, and they already cover Resolution's $2 billion neighbor, Perpetua. In fact, Roth helped raise $400 million for Perpetua just a few months ago, and now they're backing Resolution on its path to listing on the NASDAQ market, a huge signal that this company could be the next big antimony success story in America. With drilling set to begin this year, Resolution is following the same playbook that turned its neighbor Perpetua into a billion-dollar story, except today you can still get in early while Resolution trades under the radar. Everyone, if you're interested in learning more about Resolution Minerals and their signature Horse Heaven project, I'll include a link to their website, investor presentation, and stock tickers down in the description below. As always, please do your own due diligence before making any investments. But now, let's get back to our story of China's influence in Brazil and explain how the Chinese currency is changing the future of trade. Earlier this year, Brazil announced that it will sell its first sovereign debt in the Chinese market later this year by issuing panda bonds, basically bonds sold inside China but denominated in yuan, as President Lula looks to bolster ties with Beijing. And honestly, the timing couldn't be better. The panda bond market is booming, hitting a record 195 billion yuan, equivalent to $27 billion in 2024, with another 42 billion yuan already issued in early 2025. What's even more remarkable is that issuance by foreign entities has nearly tripled, now making up about 40% of the entire market. This is a huge deal because it shows Brazil isn't just trading with China anymore. It's financing itself through China. And here's the math. US 10-year treasuries yield around 4.5%, while Chinese 10-year bonds yield just 1.7%. That lower yield means Brazil can raise money more cheaply in yuan, while also sidestepping the volatility of the US dollar. And this isn't just a one-off deal. It's part of a much larger trend. Latin America's use of the yuan in trade has jumped nearly fivefold since 2019, now accounting for 14% of all cross-border settlements. For example, Brazil and Argentina are already trading iron ore, soybeans, and lithium directly in Chinese yuan. For decades, the dollar dominated Latin America. But now, Brazil is leading a financial shift into Beijing's system, and this time, it's not just about food or infrastructure. It's about money itself. On every level, Brazil looks like the big winner in this new partnership with China. Record exports are flowing out of the port of Santos, Chinese investment is modernizing infrastructure, and new financing tools like panda bonds are giving Brazil unprecedented access to global capital. But the real story goes beyond numbers. By working with China, Brazil is positioning itself as the breadbasket of the global south, not just a supplier of raw materials, but a strategic hub for food security, energy, and sustainable development. Chinese technology is helping Brazil power millions of homes with clean energy. Chinese satellites are monitoring the Amazon and supporting disaster relief. And Chinese financing is giving Brazil alternatives to Wall Street, reducing its dependence on the dollar and putting it at the center of a more balanced world economy. In short, the Brazil-China partnership isn't just about trade. It's about building the foundation for Brazil to become a leading force in Latin America and a key player in shaping the future of our multipolar world. Honestly speaking, this is the biggest reason why Brazil has chosen China for its future. And here's the bottom line. Donald Trump's policies were supposed to make America stronger. Instead, they pushed away one of the most important countries in the Western Hemisphere. First it was India, and now it's Brazil, two of the world's largest emerging economies and founding members of the BRICS alliance. As we have now entered a new era of multipolarity, the trend of the future should be crystal clear for the United States. Every time America punishes its allies and partners, China is standing on the sideline, offering a better alternative, and this is what the multipolar world looks like. And it makes you wonder, which country will be the next to pivot closer to China? Everyone, thank you for making it to this point of the video, and again, a huge thank you to Resolution Minerals for sponsoring today's important episode. Make sure you check out their investor presentation and website down in the description below. I want to thank you all for your continued support, and we look forward to seeing you all in our next video soon.